Good afternoon, everyone. Thank you for joining us. All right, so this is Dan and I's live show that we do on every Wednesday. Let's turn the video on. I know you guys just love to see us, of course. And so today we're going to be talking about cannabis stocks and how to trade stocks and options. And well, that's going to be our focus since they have been in the news lately, and some of them have gone up incredibly, actually, to the point of nosebleed and danger signals. We thought, well, we'd cover some of them. Some of them obviously have gotten ahead of themselves, others maybe just starting. And what appears to be ahead of itself at times at the beginning of a move, certainly in retrospect can look like, wow, that was nothing, several months later. We saw that with Bitcoin. We certainly saw it in the NASDAQ back in the mid and then into the latter 90s when they finally topped out. And then they go through some horrendous corrections. So that's the cycle. So we thought we'd review that, and so whether it's cannabis stocks or Bitcoin or whatever, it's all about education and an understanding of how these price patterns evolve, how they start out, how they end, which they end badly for those that don't know how to read the charts and jump on at the worst possible time. So through education, you can avoid some of those extremely painful and financially devastating type of situations by following a few simple rules. And so even when something gets extended, just simply waiting for a consolidation, a pullback, the price patterns, the type of price patterns that historically say, hey, this is a good place to jump on board. And if it doesn't work out, I can place a stop at a place that makes sense versus, jumping on board and going into hope mode. That doesn't work out. But for some that, they're starting out in the markets, many times at the beginning of a move, they jump on board there and they actually works out for them. I mean, when we'll look at a few trades, setups, and how some of these stocks moved, and where they look to be extended, they doubled again or tripled. So you do get pulled into wanting to, maybe take some additional risk, but always do it intelligently. But what we're going to share with you today will at least, give you some insights as to entry points and when the danger signal is there. So let's get going. I'm joined by my partner, Dan Giddy. We always have a great time doing these. And hey, Dan, how you doing, buddy?
Good afternoon, Greg and others. Another fantastic show, and yeah, great introduction there. But looking at the first word of our title today, we're wanting to trade these things. We're wanting to make money intelligently, and that's what we're going to be focusing on. Logical setups, proper risk management, not getting caught up in the frenzy. So we got a number of slides to get through. First, just as always, set the stage. Talk about market psychology with some of these manias, and then we'll jump in and look at all these charts in the sector in real time and give you our opinion and what we would like to see to trade them, long or short.
Awesome. All right, you're at the controls there, Mr. Giddy.
All right. So I think we have all experienced this throughout our training and trading education, provided you have learned from your mistakes. This is human emotion. And this is what we trade, in essence, is human emotion, because it is their buy and sell decisions which are creating the charts that we're trading. But we're always interested on what others are feeling with the patterns. That's very important. So this is, we call this the bell curve, just the life cycle of, people's emotions. They get optimistic in an uptrend, And, you know, the highest risk there, the euphoria, that's what we're going to show you in a couple slides. Tilray, TLRY, a big cannabis stock, went topped out at $300 intraday. And then we're going to show you in the charts this human emotion, then anxiety, denial, fear, capitulation. And that's where the master trader looks to pick it up based on the charts. At the bottom, right there where it's marked depression, is where we try to get on, and we sell euphoria.
So, and that's how we look at charts versus, you know, we all communicate with certain names of patterns, kind of gives the short code of what to look for, as you know, as far as a bigger picture. But all of these patterns are a display of what all of us are thinking. And when you approach technical analysis that way, it's so much more meaningful than just, you know, talking about things like, you know, head and shoulders tops and bottoms and such, you know, to really, you know, get an insight into that. And, you know, that came really, you know, home to me in a big way. And not that I'm proud to say it, but look, when you start associating, you know, how you feel with the charts, they make it so much more meaningful. And if you've ever sold the low of a move after holding on to something longer than you should have, you know the feeling. And when you start connecting that feeling to the chart, I mean, it's, you know, just do it, you know, and you just understand, you know, that exactly what this slide is showing, you know, and what we all go through, you know, as investors and traders looking, you know, holding on a position. And even when it's going up, it's like, wow, I'm a genius.
But you must learn from it. In trade, we always use the word objectivity, and that's when the charts on multiple time frames, depending if you're a day trader, swing trader, long-term trader, they tell us what to do with clarity.
Yeah. I'm not sure what this person is asking there. Go ahead, Dan.
So yeah, so this is what we call the master trader atom. On all time frames, this is how any tradable instrument trades. You have stage one, which is sideways. It's the ambivalent stage. There's no interest in it. So that was marijuana. That was Bitcoin in the ambivalence. Once it breaks out into what we call a stage two uptrend, we use the master trader strategies for bullish option and stop strategies. And that's the greed of the, you know, just overlay this with that prior slide. And then when we get to the euphoria stage, we get what we call wide and wimpy stage three. It could be a consolidation and an uptrend, but when we see the signs of euphoria, which we're going to show you many of those signs, when things go vertical, far from their MAs, it's splattered across all the newspaper. The taxi cabs are talking about them. You know, with euphoria is you ride in your Uber. I can't say taxi anymore, I guess, because I haven't been in one in years. You're in your Uber, and the Uber driver's talking about, hey, are you? I hope you're in marijuana stocks. They're going to the moon. That's when, you know, we're looking to sell. Then, you know, the fear, anxiety, depression kicks in, and that's the stage four. It again applies to all time frames, and we will show you how we use the master trader strategies to profit on every one of these. We just bring out our stage one a toolkit, if you will. We're trading support and resistance. We're shorting put options under support. One at the top, we were looking to sell out of the money call spreads on these toppy marijuana stocks. And we actually gave a recommendation on the Tilray, which we'll show you. But we have a lot of slides here, so let's just kind of continue here.
Yeah, so the what we wanted to start out with was looking at something, a stock, a commodity, you know, whether it's Bitcoin, it makes no difference what it is that you're trading. If you can chart it, they all form the same patterns. Now, some have their nuances, their personalities, where they trade in a certain way. You get to know these instruments when you start trading them a lot. But this is our basic foundational setups, as we're swing trading. Let me just get my little pointer out here again. I always have a difficult time finding this thing. There it is. All right. So, so we say, here's the start of a move here. Well, how do I know it's the start of the move? And what Dan and I do here is about education as well as, finding opportunities. So we have a pattern here. You might recognize it as, a head and shoulders. We call it a downside shakeout because what we explain, we give a little more detail as to the understanding of it, where there was a breakdown and then a complete retracement. And then you see this sideways consolidation that we call absorbing the supply over here. And notice this bottoming tail bar. So there was this little downside dip where buyers stepped up again and they brought it right back up. So that tells us that there's institutional buyers. And then the move starts. And when they come out of a bottom like this, deeper retracements typically are the norm. But I love this pattern here because most don't understand it because they think that that the stock is in trouble or whatever it is that you're looking at. And so let me, back up a little bit. Look at the arrangement of moving averages to price here. You can see the moving averages are intertwined here and prices are close to it. Whereas, you get further along and they start pulling apart. Anyway, this lower high, lower low, this should say lower low here. This setup here that pulls back into support, that's a great setup to get long. I love it. The majorities are not jumping on board the typical obvious type of pullback setups. And, we look at things like this red bar being ignored and then the retest and all of that. And then here's your, vanilla flavored breakout, little consolidation, another breakout, swing by, your pullback into the rising 20 near what we call minor support. And so the process, it just continues where we're looking for these setups every day. We have some scans that'll put us in the ballpark, but then we manually go through and look for the bases, the gap failures like that, the red bars being ignored, and so on. Pullbacks into the 20, deeper corrections, sometimes they pull back into the 50. Whatever it is, we have our toolbox that give us setups to participate in swing trades like this.
And I like what you said, Greg, about whatever you're trading. See, we purposely didn't put a stock symbol on here because this could be a stock, an ETF, a future, a commodity, a currency, a bag of rocks. It doesn't matter. It's conveying the same information. So that's why we say we can trade anything liquid that can be charted.
Yeah. Yeah, it doesn't, it makes no difference. And so here's one that is getting started. And this is actually, well, you can see what it is. It's IBM. And it's one that I bought yesterday. Today, it's not having a wonderful day. It's kind of coming back here. It started out great and then dipped. But what caught my eye here? Well, it certainly doesn't look like a marijuana stock. I'm hoping maybe it does at some point where, we'll look at examples of that. But, this is a stock that's been out of favor for quite a long time. You can see the mess that was going on here. The moving averages are trending down, the 20s under the 50. And then here in July, it breaks down to a new low and immediately it comes back up again. It's like, that's interesting. But it continues to go sideways and it's kind of, it gets tight. Look at the bars, how small and tight they are here. And then it clears its 200 and it gaps up last week. And then it pulls back and it's holding here. Note the big volume. So there's a lot of swing things going on here that suggest this is starting. Now, Those in our chat room know I'm not a big fond of bottoming stocks because they tend to be erratic and whippy, and they can give back a lot of the gains. But this one, it already tried, it failed, and it's got like almost a whole year of trying to bottom out here. So this is one that it won't go vertical, but maybe it'll do this and eventually it'll get going. I know it's going to report earnings later this month. So there's a lot of things to consider, when you're, swing trading and holding over a period of time. And it's not day trading. And you're not, even though some of these marijuana stocks, Dan, that one that you brought to our attention was wild. Man.
Tilray, yeah, we'll look at it live. And just one more comment on this one. So after the downside shakeout in deep retracement, from that point, July and August, we were selling out of the money put spreads on this stock, just under support, collecting money just for the stock, holding support and going sideways. And then in our master trader advisory letter last week, when it broke out a week and a half ago and started pulling in, we said we will now be watching this for directional and another put spread. But unfortunately, it gapped up where Greg pointed, and that kind of messed it up. But then the subsequent consolidation is where Greg got in yesterday, so that was perfect.
Yeah, so it's different strategies. So if you're not familiar with Dan is saying about a put spread, is that these bottoming patterns are just awesome for that, because once we recognize this kind of pattern, this downside shakeout and this consolidation and, attempts to gap lower and they fail, they tell us that buyers are stepping up and they're going to continue to do that. So, we do these income strategies versus, this looks like it can get going and be a directional, and that's why I chose it. So, the income strategies are this kind of a pattern, and this is a directional strategy, but you could still do an income strategy if there was premium there.
Absolutely. Just like our Lily, the LLY off subject, but we have both. We have a swing trade and a put spread on.
All right. Well, let's clear the lines there. So, because we were doing this webinar today about cannabis stocks, I decided, to go look at a little history, which I found pretty interesting. And I didn't put it on here, but Dan, and it's not the marijuana, I guess, that's grown today. Of course, it's not. But in the research that I did, what they called hemp instead of marijuana, George Washington, our first president, grew hemp. Right. And the reason he grew hemp wasn't to smoke it. He wasn't a pothead president. We've had some, I think. But they made it for rope. They used it for rope because it's a strong fiber. So cannabis has a lot of different uses, rope being one of them, the medical benefits. And if you read the research, one was even where it first came to point of being legalized initially was someone that got caught with it. They used their defense as it being used medically. So that was kind of the start of it. But as it says, back in 1906, it was this is a poison. Right. Then in the 20s, there were, where you couldn't use it. And in the 30s, it became, this is really a drug. And then they put a tax on it to try and control it, where to say, well, you can't use this unless you pay this enormous tax. That was in 1937. Then, as you can read here, 1942, farmers were told, go grow this cannabis because they needed rope for World War II. And as time goes on, now it's like, hey, you can smoke this stuff. Not bad. Right? So now, because it was regulated as a drug, let's put people in jail for smoking that stuff. They're using drugs and mandatory sentences. people went to jail for 2 to 10 years, $20,000 fine. So then in the 70s, as you could read, they repealed this tax. They removed mandatory sentences, and all the rhetoric, reefer madness. If you go and watch it on YouTube, it's funny as hell. I sent it to Dan last night, to watch it. It was funny. Anyway, California votes to legalize it as medical cannabis. Wasn't surprising in California.
Right. And so I think there's going to be tremendous opportunity trading this sector because for a number of reasons, because the U.S. is slowly, getting on board, relaxing the regulations, but Canada, it's becoming legalized this month, actually. And a lot of these stocks that we're going to look at shortly are Canadian stocks. And similar to the old .com when the internet was formed and companies were like, this is the new madness. We got to get into this business model. I think we're going to start seeing a lot of those similar companies here in the U.S. And we're going to watch them and trade them like we do any other pattern. So I think this is going to be a new. It's not a toy, but it's a new sector that's going to give us some nice opportunity, I think, for many, many months ahead.
An interesting point about that evolution of becoming legalized was that the states that legalized it did it through, voters. Voters decided to do it. However, that this year, I think it said Vermont was the first state to legalize it through legislation. Wow. So, how much longer will it be before the federal government, does the same? But, it was pretty interesting.
Yeah, I guess the voters lobbied the legislators to pass it. Yep.
Right. So here was Bitcoin, which, started out some years ago.
At less than a penny. It was like a fraction of 100th of a penny was the value. And we just look to the chart of the left. That was the multi-year ambivalent stage that our first slide talked about.
Right. And then, at the end of last year, where it really was in the news, and where, let me just point to it. You can see right here in this area right there, it certainly looked like it was extended at that point back in November. And then, if you went back and scrolled at the chart, it looked extended. But then it just...
Well, just to add to that, Greg, because I was just thinking that I see a small little blurb in 2017 on the chart. There's one big red bar. I remember when this thing rallied to $400, it was vertical. And that's what that little red bar is. That was the, 50 to 70% haircut from the rally to $400. And now look at it.
Maybe it was there. I mean,
you can see the little.
When you look at these things in retrospect, they don't look like they were extended until, my God, when it's, But as you look at it, you see where it just goes vertical. And at what point is vertical over? Was it here? Was it here? In retrospect, we know it was there. So we wait for an initial crack, versus trying to pick the top. So, putting it in perspective of this time frame, this daily chart, but I'm sure there were plenty of opportunities intraday to have shorted it. But, as things are going up here, obviously the odds are on the long side until it isn't, and then it breaks. And, so now it's kind of dead money, so to speak, where it's trying to regroup. And whether it's, building a base here, we just don't have the event yet that says, hey, this is off to the races, because this could result in a move to the downside. So stay away.
Yeah, I posted that in our Facebook group a couple of weeks ago, and I said, I don't know the next move. So we're waiting.
Right. So here's the NASDAQ. And so I'm just trying to eyeball these dates here. I mean, I'm kind of small, but I mean, back here, I think back here is probably where I started to educate myself about the stock market and researching everything that I could get my hands on. Of course, there was no internet back then. And then here, I remember 1994, and it looked like the market was going sideways, but a lot of stocks were crushed. And then this is where the fun began. And believe it or not, that was extended as we came into, I think that's 1996 or so. And then the move began. Was it extended here or here? But it was still trending at that point. And even here, this could be, if you look, we'll look at where things are now, but this could be here and then it went vertical into 2000. And there were, back over here is when there were plenty of market internals that were just screaming, warning Will Robinson. Yep. And, then the crack came and a lot of the NASDAQ went down. I remember what, about 95%, Dan?
Yeah, 91-ish, yeah.
Yeah. So the corrections, if you can't see it coming or at least recognize that it's here and step out of the way, and I tell you, having done this for a long time, Dan, I can remember back probably at around this time where a lot of people came for personal coaching and mentorships. And I got tired of hearing the story that was, I was a millionaire until this happened. Wow. And they held on, so after they lost so much money, they decided to get education. And, a lot of people held on, even friends of mine, and, it'll come back. Well, exactly. It eventually came back, but.
Well, and back again to our first slide, they're holding on, they're in hope mode, and then they hit depression, then they hit their puke point, and then they unfortunately sell at the low, take a monstrous loss, and, they bought the high, sold the low. They did everything wrong based on that emotional chart, buying euphoria because you can't take the greed anymore when all your friends and Uber drivers, et cetera, are talking about it. So you're like, all right, I'll buy. And then you're buying the highs.
Right. So this was the one that you brought to our attention in the room as it started to go up. And
I was watching this for many weeks. Yep.
Yeah. It's a good point what Pat is saying. Some never came back. There was a lot of stocks that never came back. I mean, the market did.
Yeah, there's a big, graveyard of stocks that we used to build.
Right. So this one was just unbelievable how it went up and how it just doubled in no time from what was extended and then went vertical, where it topped out at that 300 level. And, when things go up like that, you really don't know how high it'll go because the masses are just jumping in there. Somebody's going to get hurt, but hey, the guy who maybe it appeared it would have gotten hurt at 200 made $100 a share if he held on. So it was pretty incredible, but it wasn't sustainable.
That's for sure. And again, folks, we're going to come back and look at all these in real time and give you our opinion on where we think it's headed.
Right. So this is the NASDAQ right now, the NASDAQ composite. So I thought, putting it in perspective, because many think the market is overheated. And sure, it's been going up a long time. It doesn't mean it won't pull back, but it hasn't formed that historical pattern yet of everybody jumping on board, throwing any kind of caution to the wind which goes vertical at that time. It's like everybody's in, and we just don't have it yet. This is just actually a more of a controlled type of uptrend. And, here where it started here, but we don't have this yet. Does it have to happen? No. It's just historically, that's how it ends. So that's what we're going to be looking for, at that point, and there'll be other things that'll be telling us that the end is near before it actually happens. But that's another empty live.
That's right.
Yeah. Let's clean that up. And so talk about our approach a little bit before we go to the charts. You have to have a method, right? You have to have education, and that's what we do. Putting together multiple concepts into a trading plan, where to enter, how to manage it. I mean, that is huge in of itself. I mean, finding a pattern and understanding that pattern, we're teaching you that right here, and we're going to look at the charts. But how do you manage it along the way and read what's happening, and looking at, I say objective or subjective. This industry is inundated with subjective information, with various indicators, trend lines, Fibonacci lines, Elliott waves, Gann lines, and take your pick of what'll lead you down the rabbit hole. And you can't get away from it in this industry, because any platform you turn on is just going to inundate you with it, and your head will be spinning with it for sure. And then experience. No matter what you do, no matter what you learn, right? Experience is what makes you a professional at anything, because you can't go to college and get a degree and be the best of anything without experience. You may have gotten the highest score, but you're certainly not the best. And the patience and discipline, well, the market will teach you that, or you'll lose enough money that you'll quit.
Right. And also, when we say your plan, some people could be core traders in ETFs. Some people can be experts in selling credit spreads on a daily chart. So it's whatever fits your personality and your method. We obviously teach and follow the master trader method, but then you're just going to the marketplace to look for your setups and execute your plan, your method, and you manage in between. So, trading to us is just turning over inventory, and we're making money based upon our skill set in turning over that inventory. That's all it is to us. They're inanimate objects. So this euphoria or fear on that first slide, we see as opportunity, not as to jump in with the masses that are incredibly wrong at the extremes.
Yeah. Dan, before you go ahead, just to share with those that are new, because I had the experience of working with a tremendous amount of new traders and investors, and so many want to gravitate toward intraday trading in very small, relatively small time frames, even 2-minute charts. But until you've gotten experience, I mean, it's like, why would you get into a Ferrari and put the pedal to the metal and try and navigate curves at 100 miles an hour? And that's what you're doing as an intraday trader. Whereas, why not learn in a Volkswagen and go slow, which is, you don't have to be an investor over years, but to swing trade on a daily chart and wait for the next bar to set up with an objective method makes so much more sense than trying to go down to 2-minute charts, 1-minute charts, tick charts. Right? You go to some webinar and somebody's saying, "Oh, use this tick chart," that and trading futures. So take it slow and learn and get some experience, and then you can go to the intraday charts if you choose to. Many find out that's not for them because they can't process the information that's coming at them because it comes at you a lot faster. So, just take that into consideration if you're considering, going in there and getting lured into the thought of, oh, I'm going to trade off of this 1 or 2 minute chart and make, $1,000 in the next, 20 minutes. You can lose it in the next minute as well. So, okay. If you're interested in swing trading, I just finished this course and it's fantastic. Teach you how to approach it. This course isn't about day trading. You could take the information and apply it to smaller time frames, but this is focused on a method of swing trading over the course of days and weeks. And you can type in this URL that'll bring you to the page and you could read about it there. And you could even utilize this information because the next slide that Dan's going to put up here is about trading credit spreads, which we do virtually every single day in the chat room, but around price patterns. And the swing course will give you much more education. I mean, the credit spread course teaches you about price patterns, but not in the detail that the swing trading course is. So they're a great combination to put together. When you go to this particular page, and if you were to so choose the platinum selection, you could get into our chat room for the next 3 months. And what's great about that, and if you're interested in the swing course, I can arrange something like that. I haven't set up a page like this yet with a choice of adding the chat room to the swing course, but you can. But the great thing about that is once you learn the information, you can see us do it in real time and ask questions. So it's fantastic for that. So.
Awesome. Let's, and these are the income trades that we talk about when we sell credit spreads. Directional trades, multiple time frames are in alignment. We want a big target, and that's what the swing trading course is going to do, teach you these patterns that we're looking for to high probability setups. We're just calling a top or a bottom and selling options around it with the intent of, I'm going to keep the money because it's not going there. So they're actually very easy to trade.
All right, let's go to the charts.
Yeah, our favorite part.
I think everybody's favorite.
Well, because we love, you need that foundation, of course. And now it's like we just had the classroom. Now let's go into the marketplace and see how we can make money.
Absolutely. So the green minder there are stocks that are involved in the cannabis industry or getting involved in the cannabis industry. One of them is actually an ETF. So we can pick the stock or pick the ETF and you get the whole bunch. I'm not sure all of these, Dan. I don't know if you've done it yet, but to go and find the stocks that are actually in this ETF.
Yeah, no, I haven't, but let's do that later. And yeah, some of them I was just showing, like Kodak and Siebert are just showing you examples of the Bitcoin. When Bitcoin was ripping to the upside, there were so many stocks that just came out and said, hey, I'm getting into the Bitcoin business. And they did the same vertical nonsense. So that's why I threw some of those in. But yeah, let's go through all these in this list.
Yeah, I'm just answering Gene's question here because Gene is saying big problem with the risk to reward with credit spreads. There's no way around that. They're all about management, and Dan has done a phenomenal job on money management guidelines for trading credit spreads. That's in the bottom of the member resource area with videos and a document. And, we pound on you reading that document and watch those videos when you
Right,
sign
and
up.
also the reward to risk is only horrible, Gene, if you hit max loss, and that would only occur with a catastrophic gap. But Gene, by definition, and I don't want to get sidetracked, feel free to email me. And we've done plenty of web, go to YouTube. We have plenty of recordings on this. The pain to a credit spread, by definition, is so much less than if you were in the stock, because you don't have a cushion to be wrong. But it's all about probabilities of it working relative to the amount of the stop out if you use the master trader method in managing them. But we have a lot of stocks here, and it's 12:42, so let's keep going. We can talk offline later.
So I put them all in the minder here, and you can see in the minder, we've got percent change on the day, net change, then percent change on the month, over 6 months, and over a year. And you see some incredible numbers in here. Depending on what we're looking at, how long these have been trading. So this one here, I actually have this sorted.
Yeah, let's hit them all, and let's talk about our current bias. We're looking at daily on the top, weekly on the bottom, and let's talk about, is there a compelling pattern for a stock trade, either long or short, or a credit spread? Right. And let's bang through these.
So I like this one, and you can see it got extended here, no doubt, and had a pullback on the weekly, and I can scrunch that up. So you can see where that is on the daily. And then it had the big pullback, and this did go kind of vertical, right? And it had this correction. And it took months before it got going, and it whipped around, and then it got going again. So what I like about this is the fact that it's building this support. Look at the gap down. Buyers were there down below, and they picked it up. It tried to move down yesterday. I'm not so sure it won't continue to go down, but I like this because it is building a trading range here. So it's not ready yet. But now what do? I don't know how long it'll last, but I think a month. And I'm going to set alerts at the top and the bottom of the range.
Well, Greg, on the top one, I would, today's Wednesday, I would set it near Monday's high. And because if it can go a little bit deeper, I would love to sell a put spread on this.
Sure.
Right where you have it marked, the 42 level. Sure.
Well, I'm going to give that a week to get up there. So I do this a lot, whereas I see something like this, I set the alert for a different period of time. This one, I set it for a month. This could easily consolidate for another month within this range, and I'll wait. But so I like what it's doing. I like the weekly chart, and there's no resistance overhead. So it'll be making new all-time highs if it can clear that area.
Take a look at Michael Juliet, since that's the sector, MJ. So we actually have a put spread on in our master trader advisory letter for this one, the way out of the money, the 35.30 strikes. So this is the sector. It kind of looks like CGC. So the same thing. We'll be adding to our positions here once we get more information of whether this higher range consolidation is going to hold or not.
Right. So how long has this been around? Right, since 2016. And it's a little extended here and consolidating. So it's definitely one to keep an eye on. So this is where you can buy an ETF versus, taking the risk of a stock. It's not going to have the upside potential of an individual stock, but it's a way of participating in the sector at the appropriate time. And this is consolidating. I don't know that it's done yet, but it's one that we'll be keeping an eye on every day.
All right, let's keep moving on down.
All right, so this one had a nice run and a long consolidation. And like the other one, the CGC, It's consolidating and it's all whippy. So this kind of a pattern where it's whipping up and down, and look at the size of the moves, big wide range down, rallies back up. And this is a way of, what does whippy mean? Well, when you can get a wide range bar to the downside of this size and it get negated a couple of days later, that's whippy. And then big pullback and right back up again. So this is wild right now. It's got to tighten up.
Yep.
Got to tighten up. But look at the weekly. It doesn't look so crazy. That's about why we look at multiple time frames. So definitely one to put on the watch list and wait for it to tighten up. Yeah. This one, I don't think I've ever looked at this one, Dan.
Well, this one, I'm not sure. This is actually kind of like a Starbucks sort of tea company out of Canada. So I'm not sure if they're getting into cannabis or not, but it seems to be moving like one. So that's all.
It's just getting some attention lately, and this is how it starts. You know, some news. Probably there was some news that came out on 9/21, and it gapped up, and it got slammed back down, and so it came right back up again on volume. So another whippy, crazy type of price action that needs to tighten up.
Right.
So, you know, you put them in a minder like this, and then you just go and look at it, set alerts and go look. Now look, Dan, do you see this number right here?
Yeah.
93,000% in 6 months.
Wow.
Right?
This is another Canadian pot stock.
Green thumb. And so I guess it started from about zero, right? About 2 cents, and ran up to 25. And now it's actually kind of interesting, Dan, whether this can form a W bottom here.
I'll watch it, sure.
Yeah, I mean, it's retesting this area.
Right.
And, you know, it's pulled back a little deep, but maybe that's a W bottom. I'm going to set an alert right above the 20 MA.
Perfect.
I'll set it for a month and let's see what happens. Here's another one. This is a slug. It's only up 23.5% on the year.
Well, here's why. That is a U.S. based company that's been around for many years. It's more of a, you know, conglomerate, whatever. It's not that got into marijuana. So it's not as 100% focused as the Canadian stocks. But I like the wide range breakout on the weekly, so that's why I'm watching it.
Yep, that looks great. And it's in an uptrend. This hasn't gone vertical yet.
Yep.
Like it. This one's up almost 800% on the year. And
really,
most of that in the last month, looks like.
Oh, okay. Yeah, not GW. Right. All right. So this was one I read in the Barron's over the weekend that Indian globalization, it was saying it barely makes money. And on that blast off that Greg's marking right now, they came out and they must have a good marketing department. I was laughing in the green trading room because they came out and said, not only are we going to get into Bitcoin, but we're getting into marijuana. So they hit them both and the stock went vertical.
Yeah. And this is the kind of pattern that typically is going to end badly, but I'm going to watch this one, Dan, because at some point that TLRY looks something like this and it doubled again. So we'll see what happens over the next several days and weeks, how this pulls in or turns around.
But Greg, stop right there. Let's also, if you don't mind, as we're going through these, point, regardless of whether they've gone vertical or not, point to the place where the master trader strategies would have said, this is the place to enter, even if we missed them. So on that one right there, it's over that first red bar.
Right there.
Right there.
It's close to the 20 MA.
It broke out and pulled back and ignored a red bar.
Right. And, you know,
and weekly, go ahead.
With stocks that move like this, from this time frame, clearly, once it got going, there was no setup. And this is where if you're experienced to be able to use an intraday chart, where the hourly time frame is fantastic. Look at the consolidation and that little setup right there. And how to combine multiple time frames like this is huge. It's I can't, say it enough. Multiple time frames is a concept that, understanding that and how to put them together is tremendous.
And folks, if you want to watch that, we did an MT live, I think it was 2 weeks ago, on that exact subject. You can go not only to our website under resources, but on YouTube and watch the replay.
Right.
All right, let's continue. The reason I have, if you're just going straight down, the reason I have Coke in there, KO, is just because one day I read that they're talking about getting into the beverage cannabis sector. And I just saw an email today, not a published news source, but they said Pepsi's now saying they're going to start exploring it. So, it's just another way to participate in the cannabis craze is put it in your drinks.
Everybody's walking around inebriated. I just set an alert up at the top of that range there. I like the dip in this consolidation at resistance.
Reverse head and shoulders, sure.
Yeah, so if we can get through that, I mean, this will be a no-brainer put spread, but it'll be a good swing trading opportunity as well.
Sure.
Yeah.
Kodak was just another crazy one in the Bitcoin. When they said that they were getting into Bitcoin, look what happened to that round trip on the weekly in January.
Yeah, right. I was trying to save them from
exactly
the death trend there.
Exactly.
Gave them life for another year. We'll see.
Right.
But there's so many lessons, Dan, that we talk about while we do these NT lives. But I mean, one of the lessons is having a stop loss. And the Eastman Kodak, could they go out of business?
Dow 30. Yeah.
Yeah. I mean, Sears is down to about 80 cents, I think. Who'd have thought Sears, where you went and bought Dad that tool for Christmas, they would be there forever. They're virtually gone.
Right. They don't keep up. Yeah.
All right. So that's the ETF. This one,
another
I'm not familiar with.
Another Canadian one. Yeah, there's no setup there. Well, over yesterday's high could be a swing trade.
Not for me.
Yeah, I mean, not great, but
it broke the low here, but it needs to rebuild.
Yep.
This one.
This was one that I think is doing the same beverage, marijuana business.
Right. Okay.
Now, go back just for a second. Now, the green bar before the gap up, that would have been an adequate entry over the high of that first swing trade, but the gap messed it up. Now, I mean, if you say, Dan, I need to get in, give me an entry, then, I'd say over the week's high, but I wouldn't trade it because the weekly is it's just not high probability to me.
Right. There's no rush. Just wait your time. It'll set up. And if it runs, that's the way it goes.
Exactly. When we get the till rate, I have this one friend who every time I see him, he says, I wish I bought this whenever. And I'm like, well, number one, why didn't you? Number two, quit harping on it. Find the next one.
Yep. I don't know what the news was on this one.
That she was getting involved in Bitcoin. So that was another Bitcoin deal.
Okay. I didn't, it was like, that would make sense. Marijuana.
Right.
This is an old brokerage firm from forever ago.
Yeah, well, Mariel Siebert was, I think, the first woman who had a seat on the NYSE.
Right. So I remember this back in the late 90s, and there's the vertical move.
Brokerage firm.
Yep. Right. When the internet craze back in 1999, and where brokerage firms were like, okay, now online brokerage, and being able to place your own trade yourself, I think began, I don't remember the date exactly, but where you didn't have to have a license to place a trade, Dan. Maybe it was like 1996.
That's exactly what I was guessing. Yep.
Yeah. And so that the brokerage stocks went crazy, and well, they crashed.
And I think Schwab was one of the pioneers also.
It could be, you know. And TDZ, I think you said this one was beverages that they were getting into.
Well, no. The reason I have this one in here is because they invested a couple $2 billion into CGC, and so that's the way they're participating in the sector.
Okay, you got a
but I mean, maybe they'll do a marijuana beverage too. Who knows?
This looks worthwhile for a bear call spread, Dan.
Yeah, I'll look at it.
Yeah. And
another Canadian one.
We have a lot of potheads up there in Canada.
Well, but Greg, on a serious note, it's not only potheads there, it's the legal businesses there selling around the world. So like this Tilray that you have coming up next, I remember that part of its fundamental reason for going up like a banshee was they kept announcing good news about, hey, we've just been approved to be a distributor to Germany and this and that. So those were fundamental positive reasons, I guess, to say, hey, we're going to get more business. But the Barron's had a very nice detailed article on the sector a week and a half ago. Right. And they were not in favor of this one for fundamentals because they said it's overpriced. They only make like $300,000 a quarter, and they said their market cap was at the high was like $40 billion, and they were just saying it's ridiculous. They liked some of the others better. So let's talk about this one. Let's answer a couple things. If you can expand the chart a little bit, because we'd have to go back, where would be good places to have gotten long and to add? And let's talk about the current setup.
So if I do this, it makes it a lot easier to see.
Yeah. Right. So over the hot, go ahead.
I mean, clearly this gap reversal from the big red bar was a buy signal. Right.
No brainer. And then you could have added. Right.
So that is one of the setups, on a gap to the high of a big red wide range bar. Pay attention to that.
Absolutely. And I unfortunately wasn't at the time, or else we.
Yeah, I didn't know about this.
And the premiums on this stock are incredibly high. That would have been a setup where we would have done two trades like we did on LLI. We would have bought the stock or done a directional option trade and sold an out of the money put spread.
Yeah. Here was your next setup right there. Another gap above a red bar. Wasn't a wide one, but the bottoming tail bar tells you that buyers are stepping up. The red bar suggests, hey, this is probably going to pull back some more. And then the gap above the high, time to get on board, but you need a big stop. I mean, it took off. But there would have been no way to do, well, you could have put a stop under the bottoming tail bar, but don't let this fool you because, you know, that's like a $5 stop and you can bet there's going to be slippage. All right, let's see here. Now it gets a little crazy with the gap.
Right. Correct. Yeah. So that makes it harder to get on board.
Yeah. So, I mean, I don't know. This gapping there.
That's when I started watching it, when I actually was looking at bear call credit spreads there, but I was watching every day. I said, I want a bearish M formation, and we never got it.
Yeah, it just went crazy. And that was the insane day where it went from, 150 to 300 in a day.
Right.
And, you look at the hourly, well, it gapped up. And so now it's beginning to calm down. And let's just go back here. It's a little interesting, actually. And what I'm going to do, I don't know, like wide range bar and a consolidate. I'm setting an alert over here.
Sure.
And I'll set it for a week and see what happens.
If you want, can you pull up your option chain easy, or I can do it just to show the folks that if we went out just to next Friday, just the premiums are insane. So let's see what strike we would want. All right, so let's say if it took out yesterday's high, even look at $100 put for 9 days. What premium do you got? And let's explain what that means to folks.
$100 put. Wow.
Oh, you're looking at 38 days to expiration though, but that's fine. Same concept.
Oh no, here's 9 days. I just had to put enough strikes on there.
No.
I'm not even at 100 yet.
All right, well, I'll give you a price then real quick. And then
122 is $6.70 by 740, 9 days.
The 100s are, they're spready, but let's just call it $2.10. So what that means, folks, is if we just are wanting to say, hey, this has a bullish pattern and we don't think it's going to go down very far, we would wait for it to trade over yesterday's high, the $100 puts. So, if you, Greg, can you show them that $100 line on the chart? That if you sold those puts there, you would make $2 a share as long as it stayed above $100 in 9 days. And that's the beauty of, of selling options. And then worst case scenario is you own the stock at $98. Why? Because you're giving the put buyer the right to make you buy it from them at $100. You already put $2 in your pocket. So you now own $149 stock for $98. You're getting a 1/3 discount using this methodology. So these are very high premiums. And even the sector MJ has very high premiums, which is why we chose that one to sell puts, because an ETF has less gap risk, because it's holding many stocks in it. Yeah, Jane, we would recommend a put spread also, of course, and unless you don't mind taking assignment of the underlying at the improved cost basis, that's pretty much the only time that we sell naked. All right, did we make it through our list?
Yes, we did. Yes, we did. And you know what? Some of these, Dan, look rather attractive even for a naked, not, because for 2 days.
Right, and that's why I wanted, look at Friday.
So here's a strategy, how I would do it, and I've got an alert. You can see the hourly chart here. If this was to trade above these bars here, we could then go look at the 110 that is going to expire on Friday. It won't be 50 by 60 cents, It might be 40 by 50 cents.
Yeah, that's a good guess.
So your risk would be, assuming it happened today, a couple of days to take in $500 on a 10 lot more, $250 on a 5 lot. To say it's not going to go to 110 in 2 days, a day and a half.
Right. So you look at the pattern and you can, look at the numbers also. So 110 is $38 lower. And that's how we use the charts to pick which options to sell.
That's it. So guys, if you're interested in the spread course and the room, Dan, I don't know if you've got the link. You can get to the swing trading course right from the website under education. And you can go through that and you can get to that. But the managing credit spread course is there. But if you want it with the letter and the chat room, we need that landing page URL, which I think you had the short code, Dan, which was mastertrader.com.
Yeah, it's right here.
/spreads. Yeah, spread trader.
Yeah, that's it.
So let me just, if anyone's interested. All right, everybody. Hope you've enjoyed Master Trader Live. And we will be back next week.
Yep, and feel free to email us, greg@mastertrader.com, Dan, Master Trader. And we always have great ideas. Feel free to ask a question or recommend future topics. And we will do our best to educate you and look for great trading opportunities as always.
All right.
We invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the show when you like our page on Facebook. Just visit mastertrader.com. That's mastertrader.com.